Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome back to the analysis of the euro currency. So, in the previous trading session has happened the thing that bears do not want to see. The market has moved above the weekly pivot point and has broken our confidence resistance on the hourly time frame. So, with this price action from this support area, that is the 88 minor fib support from that swing, that is very typical for the butterflies. This price action now looks a bit more suitable for some kind of the continuation to the upside, but then it was yesterday with this just candles, some kind of the flag consolidation. But this could be, of course, the failure breakout of the flag, and this is Jack Schwager calls that bull's trap. So when the market is showing the failure breakout of the flag and then turn to the downside. So that has happened. The one problem here is that we have bearish trend. We still have the bearish trend, and that's why even on this acceleration above this pivot point and above this significant area of resistance, we can't enter on the long side of the market right now. So we need some more clarification from the market, and there's some confirmation that market is really intent to continue move to the upside. So from the point of view on the daily time frame, although we see unwelcome price action for the bears, that market move above this area that we have talked about, still we do not have reasonable context for entering on the long side of the market. So I think that today's trading session probably will be the day of expectation. On the 4-hour time frame, we see that trend holds bullish as previously, during the previous trading session. You can see this acceleration of the market break out this even upper border of this flag consolidation, and now retesting of that level. Okay, so on the 4-hour time frame, I do not see really anything really interesting currently. That's just an acceleration to the upside. On the hourly time frame, we see that how price action has developed during the previous trading session. So that is was 127 extension of that butterfly. That stands as 130.173, and that was our area to watch for the potential entering on the short side of the market. And you can see how market responds on it, how market respected. So we could see that during the first touch, market has passed to the downside. From this level, that was the pivot, that was the confidence resistance, 127 extension. So if you have entered here on the short side of the market, you have enough plenty time to put your stop to the break-even. This market has passed to the downside approximately 30 pips. So that is suitable move to the downside to move your stop. But later market accelerates further to the upside and has broken through this level and accelerated further to the 1618 extension of the same butterfly. It was 131.95. It's right here. So as you remember, we said that one thing that we do not want to see during the price action is the acceleration for this level and holding of the market above it. So why we have to wait for some time to make the decision about entering and about the direction in what we have to enter on the market? Because from the one point of view, we still have the bearish context on the daily time frame. So you can see trend holds bearish, although that was the breakout of the flag and moved to the above this area. Market stands relatively close to the area of the breakout, and this could become the failure breakout. So we need some confidence, we need the shifting of the trend to the bullish side of the market. From another perspective, market now holds above the weekly pivot point, and this is just currently the retesting of that level from the upward move to the downside. So we do not, from that point of view, we can't enter on the short side of the market as well. So we need either be confirmed by the market that that was the failure breakout of the flag and that market is ready to continue move to the downside. This probably will happen if market will return back inside of the body of the flag and will start to move according to this butterfly pattern. Okay, so if market will move inside this area and will be ready to continue move to the downside, that will probably give us the sufficient confidence that we could enter on the short side of the market, and especially when the 4-hour time frame will turn to the bearish side also by the MACD indicator. Or we need some further move to the upside and shifting of the daily trend to the bullish side to make the decision about entering on the long side of the market as well. So that's why probably, besides today is the Friday, well, and I think that probably today makes the sense to wait a bit and sit on the hands, because since market hasn't moved down according to the, if we could call it as the perfect bearish scenario, right from the 131.65 area, that will be that should be quite logical, the turning around 131.65 and continue move to the downside. Since it has broken it and now holds above it, that is a warning sign for the bears, and we need some more signs from the market, some more confirmation that market probably will choose the downward move. Well, that's why I suppose that it's better to wait a bit and get some more clarification about the direction. So if market will hold above the pivot and continue move to the upside, shift daily trend to the bullish side, well, in that case probably it will be logical to position ourselves on the long side of the market. Maybe this butterfly will happen on the market. If market will show the failure breakout of the flag, return back and will shift trends by the MACD indicator on the 4-hour time frame to the bearish side, well, in this case probably this ABCD pattern will still have chances to work properly, and we could try again position ourselves on the short side of the market. So that's our current view on the market. Just in 2 words, it's better probably to wait a bit and to make the decision about the entry direction in the beginning of the next week.